Image_style, historical_webtoon, image_style_reason, clean, grounded illustrated panels keep real-world insurance scenarios relatable without depicting real people. He did everything by the book. He had a valid policy. He had paid every premium on time for 6 years straight. When the accident happened, he called his insurer within the hour, just like the manual says to do. He filed photos, a police report, and a repair estimate within 48 hours. 3 weeks later, a single letter arrived in his mailbox. Claim denied. Not because he lied. Not because he caused the crash. Not because his coverage had lapsed. He was denied because of 4 words buried on page 11 of a policy he never fully read. 4 words that millions of Americans are carrying around right now, without knowing it. This is not a rare glitch in the system. This is how the system is built to work. Insurance companies do not deny claims at random. Every denial traces back to a specific clause, a specific condition, a specific gap between what you assumed and what you actually agreed to. And that gap has a name in the industry. People who write policies for a living call it the denial trigger. It is the line that turns a seemingly covered claim into a rejected one, almost overnight. Most policyholders never see it coming because most policyholders never go looking for it. Think about your own policy for a second. Auto, health, life, homeowners, it does not matter which one. You remember the price. You remember the monthly payment. You probably do not remember the conditions written underneath your signature. That is not a personal failure. That is the design. Policies are written in dense, technical language on purpose, not to trick you, but because insurers are managing risk at a massive scale, and risk language is precise by necessity. The problem is that precision protects the company far more often than it protects you. So today we are going to do something most people never do. We are going to walk through the exact mechanics of how a denial trigger works, using a real pattern seen across thousands of claims. Not to scare you, not to tell you insurance is a scam. It is not. Insurance is one of the only financial tools that can absorb a disaster you cannot afford on your own. But it only works if you actually understand the terms you signed. By the end of this video, you will know the 3 places in your own policy most likely to contain a hidden trigger. You will know the exact wording patterns insurers use and why they use them. And you will have a simple, 2-minute method to check your own coverage tonight without calling anyone, without a lawyer, and without guessing. Let's start with the man from the opening, because his story is not unusual. It is almost a template. He had switched lanes during a sudden downpour, hydroplaned, and clipped a guardrail. No injuries, no other vehicles involved. A clean, simple, single-car accident. His policy listed comprehensive and collision coverage, the exact kind that is supposed to handle exactly this situation. But buried in his declarations page was a line about vehicle maintenance condition, tied to his tire tread depth at the time of the accident. An adjuster pulled photos from the scene and measured the tread in 2 of his tires at just under the legal minimum. That was the 4 words. Not fraud, not negligence, just inadequate vehicle maintenance. The insurer argued the accident was more likely caused by worn tires than by the storm itself, and that shifted the claim from covered event to preventable neglect. Here is the part that matters most. He had no idea tire tread depth was even a factor in his policy. Nothing in his renewal email mentioned it. Nothing in his app reminded him. It was sitting quietly in the original contract he signed years earlier. This is the first core lesson about denial triggers. They are almost never new rules invented to cheat you. They are old conditions you agreed to once, then forgot, while your actual situation slowly drifted out of compliance with them. Insurance companies are not betting that you will break the rules. They are betting that you will forget them. Let's look at a second case, this time in health insurance, because the pattern repeats with a different costume. A woman went to urgent care for severe abdominal pain. The doctor ordered an MRI the same day. Her health plan covered diagnostic imaging. She had paid her deductible already that year. On paper, this should have been routine. The claim came back denied for lack of prior authorization, a process she never knew applied to her specific plan tier. Some health plans require pre-approval for certain imaging unless it happens in an emergency room, not urgent care. The line between urgent and emergency sounds like everyday language, but in policy terms, it is a hard legal boundary with real financial consequences. She did not choose urgent care to cut corners. She chose it because it was faster and closer. That decision alone triggered the denial. This is the second core lesson. Denial triggers often live in definitions, not in dramatic exclusions. Words like urgent, emergency, reasonable, and necessary feel like normal English, but inside a policy, each one has a narrow, specific legal meaning that may not match your instinct. You are not being punished for doing something wrong. You are being measured against a definition you never read closely enough to know existed. Now picture a third scenario, this time around life insurance, because the trigger here works on an entirely different timeline. A man passed away 2 years after buying a policy. His family filed the claim expecting a straightforward payout. The insurer opened an investigation into his original application, specifically a single checkbox about tobacco use from years earlier. Records showed an old prescription that, combined with his medical history, suggested possible nicotine use that he had marked No. 4 on his original form. Whether or not that single answer was intentional, the insurer treated it as a material misrepresentation, and that reopened the entire underwriting decision. This is the third core lesson, and it is the one most people find hardest to hear. With life insurance, the moment of risk is not the moment of the claim. It is the moment you filled out the original application, sometimes years or even decades before anyone needed the policy at all. So now you have seen 3 different triggers, in 3 different kinds of policies, and they all share the same shape. A condition you agreed to once, a definition you never fully understood, a detail measured against a moment you forgot existed. This is where most insurance content online stops, right after the scary story, leaving you anxious but no more equipped than before. We are going to do the opposite. We are going to build a simple checklist you can actually use, starting tonight, with the policy you already have. This is not about distrust. Insurance still does what it is designed to do for the overwhelming majority of claims filed every year. The goal here is narrower and more useful. The goal is to find the specific gap in your specific policy before it ever gets tested by a real event. Step 1 is locating your declarations page. Every policy has one, usually the first page or 2, summarizing what you are covered for and at what limits. This page is your map. It tells you the categories your insurer considers relevant to your risk, which is also a preview of where conditions will be attached. Step 2 is searching your full policy document for 3 specific words: condition, material, and maintain. These 3 words appear disproportionately often inside clauses that lead to denials because they are the legal language of ongoing obligations, not one-time promises. A one-time promise is something like, "We will cover fire damage." An ongoing obligation is something like, "Coverage is contingent on maintaining the property in good repair." The difference matters enormously. A one-time promise just sits there protecting you. An ongoing obligation requires you to keep doing something correctly, all the time, without being reminded. Step 3 is checking your last renewal notice, not your original policy, but the most recent one, because conditions can shift slightly at renewal without headline announcements. Insurers are required to notify you of major changes, but major is defined narrowly, and small adjustments to definitions often pass through with minimal visibility. If you have not opened a renewal notice in more than a year, that alone is worth fixing this week, regardless of what you find. Step 4 is identifying your notice window, the amount of time you are required to report an incident after it happens. For auto claims, this is often measured in days. For health claims involving prior authorization, it can be measured in hours before a procedure, not after. If you do not know your notice window for each type of coverage you hold, you are operating with one of the most common blind spots in personal insurance. Step 5 is understanding the difference between an exclusion and a condition, because people often confuse the two and look in the wrong place. An exclusion is something never covered in the first place, like flood damage on a standard homeowner's policy. You cannot trigger an exclusion. It was simply never included. A condition is something that was covered, but only if a requirement is met, like maintaining smoke detectors for a fire claim, or reporting a water leak within a set number of days. Most denial triggers live inside conditions, not exclusions, because conditions are the part of the contract that depends on your ongoing behavior, not just the event itself. This is the mental shift that matters most from this entire video. Stop asking, "Am I covered for this kind of event?" Start asking, "What do I have to keep doing to stay covered for this kind of event?" That single reframe is the difference between reading a policy passively and reading it the way an adjuster eventually will. Let's turn this into something you can do tonight, in under 5 minutes, with a piece of paper or a notes app open next to your policy. First, write down every policy you currently hold: auto, renters or homeowners, health, and life, if you have it. Most people hold 3 of these 4 without thinking of them as a connected system. Second, for each policy, find the word condition using a simple search if your document is digital, or a quick skim of the table of contents if it is printed. Third, next to each condition you find, write one honest sentence describing whether you are currently meeting it, not whether you meet it most of the time, but right now, today. This is where people get surprised. Smoke detector batteries that have not been checked in over a year. A home security system that technically lapsed when the monitoring subscription ended. A second driver added to the household but never added to the policy. None of these are dramatic failures. They are small, ordinary, forgettable details, which is exactly why they show up in denial letters more often than outright fraud does. Fourth, check your notice windows specifically, the deadlines for reporting different kinds of incidents, and write them somewhere you will actually see again, not just in your head. A sticky note inside your glove compartment for auto claims. A reminder in your phone for health pre-authorization rules. A note on your fridge for homeowners reporting deadlines. Wherever you will genuinely look. Fifth, and this is the step almost nobody takes, call your insurer's customer service line not to file a claim, but to ask a single, specific question. What conditions could cause a covered claim to be reduced or denied under my current policy? You are allowed to ask this. It is not adversarial. It is the same kind of question a careful person asks a mechanic before a long road trip, not because they expect the car to break, but because they would rather know now. Write down the answer. Insurers are required to provide accurate information about your coverage, and having that conversation on record can matter later if a dispute ever happens. None of this guarantees a future claim gets approved. No video, no checklist, and no amount of preparation can promise that, and anyone who tells you otherwise is not being honest with you. What this process does is something more realistic and more valuable. It closes the gap between what you assumed you agreed to and what you actually agreed to, while there is still time to fix it. That gap is where almost every denial trigger lives, not in some hidden trick designed to cheat you, but in the simple, human reality that policies are long, life is busy, and nobody reads page 11 twice. The man from the beginning of this video eventually got partial coverage after appealing and providing maintenance records from before the accident. It took him 11 weeks and 3 phone calls he should not have had to make. He told us the thing he wishes someone had told him a year earlier was not, don't trust your insurance company. It was simply, go check your own policy before you need it, not after. That is the only message this video is built around. Not fear, not suspicion, just 5 minutes of attention now, instead of 11 weeks of stress later. Pull up your policy tonight, find the word condition, read the sentence around it twice. That one habit is worth more than almost anything else in this video.